Good evening, my dear friends. Welcome to our Patron live sharing class. It's my pleasure to be able to share with everyone here again. I hope everyone are able to understand and able to pick up the knowledge I share. And also to put it into practice and help everyone to make a full profit. As for today, I want to share the event that is coming up with everyone. As most of you who attended my previous class knows that I attended an important meeting on Friday with the headquarters. For friends who are new or those didn't manage to attend my previous class, I will share the information of the event with everyone again. So friends, please stay with me throughout the class for more details. Besides that, I will still continue to share more profitable high quality stocks, market analysis, trading tactics, and guide everyone to a better future. Thank you once again for your support. Okay, let's take a look at today's content. Okay, we'll be covering these 6 topics. Okay, let's move on to the first topic. Okay, today we'll be starting off with the Nifty Index. Today the index opened higher in the morning, then quickly declined. The Nifty Index found support near 21,300 after the decline and began to rebound. In particular, the heavyweight stocks Reliance Industries shown a strong rebound during the day. In the midterm, PSU Bank, the stocks and pharmaceutical stocks also joined in, pushing the index higher. In terms of sectors, the energy sector was the strongest for today, with good gains in oil and natural gas. This was due to the disruption of maritime trade caused by the Houthi militants, which allied with the Iran attacking ships in the Red Sea, forcing companies to change shipping routes and causing oil prices to rise, thus leading to an increase in stock price. In terms of importance of news, such events can only affect for the short-term trend of the related sectors, while major events such as Federal Reserve significant increase of rates, the decision can be a huge impact on the market. It's more important to note that this refers to the importance of the news, but not its spread. Technically, today closing candlestick chart is quite similar to the one on about 13 days ago. From the perspective of the chart, there are 2 uptrend lines support acting as a support. Okay, you can see over here, these 2 acting as a support. Okay, as long as the index does not break below the trend lines, regardless of the daily fluctuation, it is considered a very healthy upward trend. Although the price reached a historical high today, this kind of high is not significant in terms of technical analysis. Without any particular positive or negative news simulations, it is expected that the Nifty Index will consolidate in the range of 21,300 to 21,500 points in the short term. Okay, let's move on to the next one will be Sensex. Okay, similar today, the Sensex index also reached a new high. The significance of the new high is not substantial. Of course, the chart of this index is quite similar to the Nifty index. So we can briefly mention about it. As for the resistance level for the Sensex index, okay, we can refer to the vicinity of 71,600. Although the price has already broken through the level today, we can still appropriate it at around 71,600. The support level of this index can be referred around 71,000. Okay, that's my personal interpretation and analysis of today's overall market situation. Let's continue with the upcoming contents. Next content. Macro analysis. Okay. For this, domestic rating agency, which is ICRA, revised its 2024 fiscal year GDP growth forecast from the previous 6.2% to 6.5%, which is on Monday. However, the reverse forecast still falls far below the Reserve Bank of India, which is the RBI prediction of 7% actual gross domestic product, which is GDP, growth for the current fiscal year. Early this month, the Reserve Bank of India raised its GDP expectation from 6.5% to 7%. Referring to the revised figures as a conservative one. The rating agency did not specify the reason for its lower growth expectation in its business activity monitoring. Whether it's the Reserve Bank of India GDP growth forecast or the ICRA, despite the different specific forecast results, one thing is undeniable: the reality of high GDP growth. High GDP growth is not just a prediction, just a happening reality. It indicates the immense potential and space for economic development in India. Actually, I do not know about everyone else, but I certainly proud of how India rapid progress. As for me, I have been in this industry for so many years. I definitely want to trade in a market that has potential to grow. Okay, let's see the next. The International Monetary Funds, which is a IMF, stated on Monday that due to economic reforms in key areas such as digitalization and infrastructure, the Indian economy has shown strong growth and is expected to contribute over 16% to global economic growth. The IMF released its annual Article 4 consultation with India's on Monday. And based on the results of the consultation, this South Asian country is expected to be one of the fastest growing major economy in the world this year, supported by prudent macroeconomics policies. The Indian economy has rebounded strongly from the pandemic and has become an important driver of global growth. Despite some overall inflation instability after a surge in the year 2022 and 2023 fiscal year, the overall inflation has slowed down. The report indicates that employment has surpassed pre-pandemic level, with the informal sector continue to dominate, while formalization has made progress. The financial sector has remained resilient, with minimum impact from global financials pressure at the beginning of 2023 this year. Although the budget deficit has erased, public debt remains high and requires physical rebuilding. On a global scale, India's role as a G20 chair in 2023 has demonstrated its significant contribution to advancing multilateral policy priorities. It is evidence that India's development is accelerating rapidly, with immense potential and a significant role on the international stage. And we know that economic development and political stability will further provide continuous momentum for the stock market growth. Okay, let's move on to classical tactics. In the previous period, I've been sharing some techniques about limit up, but having only techniques is not enough. We also need to know the reasons behind it and why so many people favor the profit model of stocks with limit up in the market. What are the reasons behind it? So today I will share this with everyone. First, let's take a look at the theoretical basis of the profitable method of trading in limit up stocks. It can be divided into several aspects. Firstly, limit up stocks can initiate market trends, boost a wave of market trends, and drive market surge. They can change the stock price from a few rupees or tens of rupees into several hundreds or even thousands of rupees. Bring huge profit to investors who capture the opportunity. They can attract billions or even hundreds of billions of funds to be invested in a stock. It can refresh the stock price, and the stock will shine like a star in the market. When the stock price hits the limit up, it indicates the strongest desire for an upward trend. And the first limit up is often critical point for a short-term upward trend. When a stock itself has significant impact on sudden large-scale increase, such as sudden major positive news or market reversal, but is forced to stop at 10% or 20%. These numbers are just examples. It subjects to the actual market restrictions. The next day, due to inherent upward trend requirement, it is likely to continue to rise, presenting a clear speculative opportunity after a stock hits the limit up. Those who originally intended to sell the stock will raise their psychological expectations and sell at a higher position, while those who want to buy will strengthen their confidence in the stock due to the inability to buy and will not hesitate to buy at a higher position. Therefore, the impact of limit up on boosting and dropping stocks prices is significant. When a stock is about to hit the limit up, if one can promptly determine that the stock price will be at the limit up position for the rest of the day, then entering immediately will provide a very good profit opportunity at the high point the next day. The limit up technique is one of the important tactics for short-term trading. If this technique is used properly, the opportunity for profit is also very substantial. For those who always say want to make money in a fast way, this is one of the methods you can gain sufficient profits. Okay, let's continue. Take this specific chart. Okay, let's take a look at the chart. I have marked it very clearly. After a long period of consolidating, the first limit up occurred, which directly triggered the subsequent continuous rise. Therefore, this limit up is the starting point of the market. And at the same time, there were continued limit ups during the overall rising process. Okay, you can see over here. Ultimately, this limit up drove a very strong upward trend. In fact, from the first limit up, the upward amplitude in the chart has already exceeded 100%. So, did the market start from the first limit up? Did a significant upward trend erupt afterwards? The objective, speaking, no matter which trader, as long as they are technically orientated, it is simply impossible to make all this profit. So, should we actually lower down our profit expectations? Can we just aim for 20% instead of 100%? Or just even 10%? Of course, there were price pullback during the upward trend of this chart, okay, which you can see over here. But there were indeed continuous limit uptrend, correct? Which is here. The pullback, then it continue. For traders, this continuous limit up represent a sure profit, which is here. Okay, let's move on to another case. Let's take a look. Okay, this stock also experienced a very strong upward trend. Once I looked at it, found that the first trading limit up to the position indicated by the arrow. Okay, over here. Okay. From the first trading limit up to the position indicated here, which is here. Although the increase is not yet 100% at present, it is already very, very close. Okay. The intense upward trend in this chart also started from the first trading limit, which is here. There are definitely various upward trends in the market. The trend I am sharing with everyone now is just one of them. In addition, as I have shared before, money is the most direct reason for driving stock price up. Looking at this chart, you can see clearly that the trading volume has significantly increased during the process of the stock price hitting the limit up. Okay, trading volume. So, what is this trading volume? This trading volume represents money. Because only when with the inflow and the outflow of money can the trading volume be amplified. Similarly, take this stock as an example. Did it explode with a big trend from the first trading limit up? There is a relation here that everyone needs to pay attention to. Not every first trading limit up can lead to a super trend. In fact, it is not necessary. As for traders, it is enough to earn a small portion of it. Okay? Okay, let's take a look at why stock rises to limit up. We already discussed this topic earlier, which is when the stock price has a strong desire to rise, but is limited by the market rules. Therefore, the limit up appears. No stocks can rise without a reason. So, what are the reasons for a limit up? There are many reasons, but every reason is reasonable. For example, for policy reasons, when the policy favors a certain industry or a certain stock, the market will interrupt it, leading to more people buying the stock and causing the price to rise. Another example is performance. As when a stock performance rises significantly, it can also reflect on the stock price, sometimes causing the stock price to hit the daily limit up, and sometimes not. Other reasons include like asset restructuring, speculative trading, oversold rebound, sector linkage, the impact of changes in the surrounding markets, and market reversal. And these are fundamental reasons, beside which there are other reasons. Okay? Okay. One of the most important reasons for a stock price to hit the limit up is due to the push of the main funds. The limit up is the result of the operations of the main funds, which embodies the strategy and tactical intentions of the main funds. In fact, this is similar to marching and fighting. Whether it is large or small funds, any funds entering the markets wants to make a profit from it. The main funds may also rely on fundamental reasons mentioned above in the actual operation process, such as performance growth, policy dividends, oversold rebounds, and etc. As for how many main funds operate to achieve their ultimate profit goals, that is another topic which I will not discuss today. What I want to tell everybody today is that regardless of the reason, the rise in stock prices ultimately needs to be implemented in terms of funds. Okay. Here I want to say thank you everyone once again for your support. It is because of your support that our team in India is able to participate in the Asia Pacific Headquarters Selection Campaign. There may be many new members joining our groups or friends who have just joined our online live classes and may not be familiar with us. Let me briefly explain about our company. This Pantron Ventures is an online live class. Pantron Ventures is actually a top 100 global asset management company. Our contest of the Asia Pacific headquarters will officially begin tomorrow. New friends may not be very clear about this activity, so I will introduce to it to everyone again, which may take up a little bit of everyone's time, and hope And thank you for your understanding. Okay, first of all, again, I would like to express my sincere gratitude to all the members of our Petron Ventures India for your strong support. It is all thanks to everyone's backing that Petron Ventures had a privilege of being one of the competitors for the company's Asia Pacific regional headquarters location. At the same time, the senior management has collectively decided to officially launch a large-scale event called Contest of the Asia Pacific headquarters. Friends who are not familiar, today I will share with everyone in detail about how to participate in the event and the contest of the Asia Pacific headquarters. Okay, this contest of the Pacific headquarters event has been approved by the company's headquarters senior management through unified decisions. Petron Ventures, a global top 100 asset management company, is expanding its influence and market shares worldwide. After a year of strategic layout in Asia Pacific region, the significant progress has been made. Since entering the India market this year, our group members have continued to increase, with the numbers still expanding. Since the launch of the online live class on 10 December 2023, the daily online audience has exceeded 60,000 and has received consistent praise. To commemorate the successful strides made in Indian market and other Asia Pacific regions, and to swiftly enhance Petron Ventures' market shares and reputation in India, as well as to amplify our asset management skill within the Indian market, we are excited to announce the official launch of the contest of the Asia Pacific headquarters. The primary objective is to facilitate the seamless determination of Asia Pacific headquarters location by 23rd February 2024. Okay, here are the details of the rules of the events. Okay, they are split into a few points. Okay, for point 1, India, Hong Kong, Japan will evaluate their market shares through the total numbers of participants from 20 December 2023 to 27 December 2023, and the total asset management scale by 23 February 2024, in order to decide on the location of the Asia Pacific headquarters ultimately. For point number 2, the comparison of the numbers of participants in each region will be ranked based on the number of supports in the Petron Ventures asset management account for each region. Organizations with an account can click the support button, with each account only able to successfully support once. So, the support of every friend is extremely precious and important to us. Actually, it's not really that complicated or difficult for everyone to understand. All you need is to click on the support button to show your support. And with one support is enough to help us to succeed in the contest. Especially for all our friends who support us, we also prepare some benefits. Okay, for point number 3, opening an institutional Petron Ventures asset management account for the first time will grant random interest-free trading funds ranging from 10,000 to 50,000 rupees. The interest-free trading funds can be used from 20 December 2023 to 27 December 2023 until 23:59 hours, which is 2359 hours. and will be fully retrieved on 28 December 2023. The interest-free trading funds cannot be withdrawn, but any profits obtained from the trading will be owned by the supported investors and can be withdrawn after 27 December 2023. During the events, you only have the rights to use the funds. Okay, I repeat, you only have the rights to use the funds. Okay, and the funds, the interest-free funds cannot be withdrawn. Okay. Okay, point number 4. To ensure profitability, all trades during this event will be uniformly guided by Petron Ventures traders. To ensure accuracy and to experience the higher quality investment services offered by us. Okay? For point number 5, as long as trades are conducted according to the trader's guidance from 20 December to 2023 to 27 December 2023, any resulting losses will be borne by Petron Ventures. To ensure that all investors from the India region continuously achieve stable profits during the support period, and to enable India region to successfully win the regional participation comparison until 23rd February 2024, our senior trader Chandra Shekhar will assist in confirming the entry and exit timing of stocks trades every day. Additionally, it is worth mentioning that during the event, in order to help everyone to make more profit quickly, my trader will lead and guide everyone to engage in trading stocks. We will trade stocks with that have limit up. This is to achieve quicker profits, and at the same time, you also may learn something from it. Okay? Learn while you trade. Since our establishment in India market, Petron Ventures has received strong supports from our friends. Here, on behalf of the company, I would like to express our gratitude regarding the contest of Asia Pacific Headquarters event. The company has actually made preparations in the early stages. The company has invested a large amount of funds, manpower, and resources. At the same time, this is also a way to thank and give back to the friends who have always supported us. Hoping that everyone can continue to support us rigorously. Your support is not only support for Petron Ventures, but also for the individuals. Once again, I would like to say thank you very much. Okay, please register with my assistants to show your kind support. Your kind support is greatly appreciated. Jahi! Okay, let's move on to our next topic. Wall Street Quartz. Okay, today we will continue with more Wall Street Quartz. As I mentioned before, these experiences are the result of the practical experience of our seniors in the market. And they are of great reference and have high learning value, especially for newcomers. I hope that after learning together, everyone can quickly improve their overall trading abilities, thereby reaping more profits from the market. Today I will share 2 more quotes with everyone. Let's continue with the first quote. Don't average down. I believe a lot of traders or friends have heard before this or do before this. Okay? When you start to average down, it simply means that current stock price has fallen below your cost price. Many investors in the market makes mistakes, and instead of admitting them and starting over again, they try to average down with a sense of luck, hoping to lower the average purchase price and recover losses, or even make a profit when the stock rebounds. This is a common mindset and approach, but the vast majority will end up failing. Okay? I have even noticed a very small number of friends who start averaging down when the stock has very little fluctuation. This kind of averaging down is actually meaningless, because if you keep doing this, you may have not have enough funds available when you find better trading opportunities in the market. Let's put it in this way. If you manage to average down 10 times and safely sell the stock for 9 times and gain a small profit, but in the remaining of the one time you fail to exit smoothly, there is a great potential or possibility that you will wipe out all your profit from the previous 9 times, or even incur losses. Put it in another way also. After the first entry, if there is no paper profits, don't add to your position. If there is a paper profit, it means your initial judgment was correct. And then you can expand your gains by adding to your position. Otherwise, immediately cut your losses and look for another opportunity. Please take a moment to think about why this is the case. Actually, the reason is very simple. Okay, let's move on to the next quotes. Plan your trade. Trade your plan. Whether you are a beginner or an experienced stock trader, it is essential to know what you are doing before trading stocks. For investors, the focus should be how, rather than constantly questioning why. For example, when you buy stocks and the market does not follow our expected trajectory, how should we adapt? It is best to have written strategy for such situations, which is usually tailored for medium to long-term trades. Short-term traders may have different strategies due to different trading cycles, placing more emphasis on their ability to respond in the moment. Especially for beginners, after a few days in the market, they may not even remember their mindset. When they bought the stock, when the price fluctuates, they may feel lost. This is entirely due to a lack of prior planning. At the beginning, our trading plans may not be perfect, but with experience, we will continually refine our methods. It's like a spiral. After a turn, you may seem to be still in the same place, but in reality, you have ascended to a higher level. Methods can be modified and must evolve with accumulated experience. The key is always have a method to guide your actions. One of the most common mistakes for beginners, okay, is without a proper plan. Buying stock casually and then having no idea how to track them afterwards. If you find yourself in these situations, it's crucial to learn to establish your own plan. Through long-term learning and training, you may eventually become an outstanding in this industry. Okay, let's move on. Okay, let's take a look at our stock sharing time. Will be Saregama. Okay, sure. It's our time to. Once again, I want to remind everyone that regardless of whether the stock price goes up or goes down, as long as it's a stock that recommended by us, we will continue to track and observe it. Electron Ventures has been serving the Indian market with a very responsible attitude towards all members. Since entering the market, we will track all the recommended stocks until we exit. Therefore, we have gained the trust and support of our members and friends, and I want to thank everyone once again. Okay, let's see. Saregama, formerly known as Gramophone Company of India, okay, which manufactures and sells music storage devices, is one of the most renowned audio entertainment companies in India subcontinent. The company performance has been impressive, with a steady growth in revenue and net profit. In the last fiscal year, the company's revenue increased by 28.38% compared to the industry average revenue growth of 7.03%. However, recent trends may not be pleasing to investors as the stock price has not seen significant growth and the trend fall back after a slight increase. This may affect investors' psychology, which is understandable. But considering the current situation, although the price is undergoing an adjustment, the cost price is not high. And the current price is still close to our cost price. At present, what we may pay is only time. The time that we lost, okay? And we are more concerned about the future profit opportunities. Looking at the chart, the current stock is range bound state and is not at a high position, but rather a low position. Therefore, my personal recommendation for this stock is to continue to hold and wait patiently. Okay, let's move on to next stock. Adani. Okay. Adani is one of the leading trading companies engaged in the trading of electricity, coal, and agriculture products. Last year, the annual revenue increased by 96.18% to reach 138,175.12 million rupees. The industry average revenue growth rate for the previous fiscal year was 25.67%. The annual net profit for the last year increased by 218.45% to reach 2,472.94 million rupees. The industry average net profit growth rate for the previous fiscal year was 45.28%. As for the specific business projects, we will not actually go into details, as everyone can actually search on it and explore on your own. For a technical chart perspective, at the daily level, there have been a breakthrough in the previous consolidation level range, and is currently in a post-breakthrough trend. Although the trend is fluctuating, the stock price is still above the MA5, indicating a good current trend. Those who have already purchased this stock continue to hold on with confidence. Okay? Okay, let's move on. Star Health. Star Health is India's first standalone health insurance provider, with coverage expanded to health, personal accidents, and overseas travel insurance. It offers customized policies to meet the needs of individuals, family, and businesses. Star Health is one of the largest private health insurance company in India. Currently, the company is operating normally with no negative news. Although there has been a slight decline in the stock prices in the short term, there may be friends who holds a small number of stock may feel nervous. However, in my opinion, there is no need to worry. Firstly, the magnitude of the price decline is not large. Secondly, the current price has reached the previous low, which serve a natural support level. Okay? Support level. In fact, even if this support is breached, okay, let's say if it is breached, it is not a major issue, because from an indicator perspective, a price falling below the previous low will create a divergence in the MACD indicator. What does a divergence in the index means? It signifies an upward movement. Of course, this does not necessarily mean that the previous low will be breached. Okay? Doesn't mean you will breach. Therefore, there is no need to worry about this stock too. It is advisable to continue to hold. Okay? Next, Kota Bank. Okay, Kota Bank is engaged in commercial banking, investment banking, stock broking, car finance, and asset management, and insurance, life insurance. The company operating performance considered excellent, with all economic indicators steadily rising. Okay, you can see it rising. Now, let's take a look at the technical chart of this stock. Firstly, the stock has already broken through the previous high point twice. Okay, over here. At the same time, we can clearly see a standard head and shoulder pattern. Okay, standard head and shoulder pattern, which is very clear and standard for confirming the bottom. Since the bottom has been confirmed, all that's left is to see how long this bullish trend will last. Of course, we don't need to know how long or how high it will rise. Okay? Therefore, patience is required for holding this stock. Although its upward speed is not fast, its safety is extremely high. So, patience is the key. Okay. For this stock was just recommended yesterday. Okay, Infosys. Infosys Limited is a global technology service company that defines, design, and delivers business solutions based on information technology, which is IT, for its clients. The company is a leading provider of consulting, technology, outsourcing, and next-generation digital services, helping clients develop and execute digital transformation strategies. It is the second largest software exporter in India, with excellent operational performance as evidenced by continuous growth in operating incomes and net profit over several years. The sustained growth reflects the stability of the company's business strategy and management, which bodes well for the long-term development. The slight decline in the stock price today is merely a breakout oscillation. From a technical perspective, the stock price has just experienced an upward breakthrough. Okay? Over here. With significantly increased trading volume corresponding to the preceding two large bullish candlesticks, which is here, large volume, and these two large candlesticks. Okay? Indicating substantial funding drive the upward movement. This healthy upward breakout is further supported by the daily MACD indicator and the weekly MACD indicator, both signaling strong bullish momentum. The recent price retracement over the past 2 days is a confirm of a breakout, presenting a buying opportunity at a lower level. Okay, friends, so for today's our live sharing class will end here. Thank you very much for your strong support. Our next class will be on Thursday, 21st December 2023, 8 p.m. I hope to see everyone here again. And once again, thank you very much for your support and good night.